How to get the best mortgage deals for yourself. Should you refinance? We'll talk about interest rates and what you need to know about SORA, which is the new interest rate benchmark in Singapore. Understand what it means and how it affects you. Also, should you choose fixed or floating rate? For all these questions, you're not going to hear "it depends" kind of answer, because my guest is very forthcoming, no holds barred kind of style. He will share his own take on several questions related to mortgages. We talk about foreclosure and what happens when you cannot pay off your mortgage loans. You'll also find out how to calculate your loan eligibility with concrete examples and numbers, and we'll consider different scenarios like whether you're self-employed or an employee. We'll also discuss insider strategies on how high net worth individuals leverage to buy more properties. Although I have to say that what you'll hear is not financial advice, please do your own due diligence. Let's understand the pros and cons of such leveraging strategies. Hello, my name is Andrew and welcome to another Chill with TFC episode. In this series, we talk to interesting people with relevant experience and insights to help us learn from their perspectives so that we can create the life we love and manage our finances well. My guest first appeared on Coconut Avenue, our property podcast, and he has shared useful tips regarding mortgages. Therefore, we've invited him on Chill with TFC to share more about this topic. Let's welcome CEO and co-founder of Mortgage Master, David Bay. You've been on Coconut Avenue. That was our property podcast.
All right.
That was a bit more than 6 months ago. Give us an update on how the property market is doing. How are the mortgage rates? Are more people taking out mortgage rates or less people? What's the interest rate? Give us some context.
Okay, so on interest rate first, interest rates seem to have reached the all-time low maybe around April, June this year. So that was probably when I was on Coconut Avenue. And it has not shifted much from there. In fact, it is tearing very little upwards. For example, for a significant size loan, let's say 2 mil, 1.123 years fixed is now 1.153 years fixed. 3 basis points is really insignificant, but at the same time, it is slowly tearing upwards. Why so? Because there is talks in the market that the US Fed rates may increase by 2023. And when that announcement happens, it will be priced in before, and so interest rates will start tearing upwards. And as such, right now, floating rates are actually tearing. The spreads are so low. SORA rates start from $1 million loan can get you a SORA plus 0.8, which gets you less than 1%.
If you need some reference, right, you can refer to the Coconut Avenue episode. Search for Mortgage Master, David. But, for the sake of this episode, for those who are listening in for the first time, I also need to help us define SORA.
Yeah, okay, wow. Ouch. Okay,
Do I need to Google?
So, long ago, we have used SIBOR for the longest time.
Right.
So I think most people in the finance world know what SIBOR is. Singapore Interbank Offered Rate. It's a rate of which ABS publishes every morning, and it actually is a rate of which banks lend and borrow money from each other. That's why Singapore Interbank Offered Rate. So this rate is transparent and fair because banks cannot cheat bank, So DBS having the 3 local banks, DBS, UOB, OCBC, having a lot of liquid cash, will lend money to foreign banks for time being when foreign banks have to do huge loans to their clients. However, because of London, LIBOR was manipulated in the past by certain banks, HSBC and others. yeah. So
Okay.
I'm not shy to say.
Yeah, I didn't catch that, but okay, yeah. Please go on.
It's in the news, right? It's in the news. Things that are not concrete, don't say lah. So with the fear that this LIBOR, Hong Kong is HIBOR, Hong Kong Interbank, Singapore is SIBOR. So there's a chance that this can be manipulated. So MAS is doing away with SIBOR in the near future. They never say the date, they say in the near future. And they want all the banks to take their floating rates and peg it towards SORA, which is the financial institutions overnight lending rate.
For self-employed versus you're an employee, so how does the home loan eligibility works?
Okay, so when you're an employee, actually calculation is very simple. You either use TDSR for private or MSR and TDSR
Okay,
for HDB.
let's go through TDSR, total debt servicing ratio. Please
Yes.
explain it.
Okay, total debt servicing. Okay, so when you buy a house, you always have to go through TDSR regardless it's private or HDB. TDSR stands for all your total debts. The ratio cannot be more than 60%. So they say
All our car loans,
all total debts.
every loan that
Every
you're
loan.
having. Yep.
So what are loans?
Credit cards.
So for example, I use easy numbers, okay? A guy is privileged to earn 10,000 a month, 60% is 6,000. So 6,000 of his income can be used to service all liabilities. So if he owns a car and the car loan is 1,000 a month, he's left with 5K. If he uses many credit cards and the minimum sum payable add together is another 1,000, minus another 1K, he's left with 4K. Insurance, he has a lot, but insurance is not a liability, so you don't need to care. Right, so he's 4K. So then we'll do the maths and reverse engineer. It's all algebra actually. With 4,000 left of income for loans, how much is his maximum loan? That's how we calculate home loan eligibility. That's for private. For HDB, we also must calculate MSR and take the lesser of, which is 30%. So TDSR is total debt. M is only mortgage servicing ratio. So if he owns a shop, an office, that's a mortgage. If he doesn't own any other property, then it's just 10,000 a month, 3K is for mortgage, then it's just 3,000 like base of that, and then find the home loan eligibility based on 3,000. Yep. So technically, if a guy has no liabilities at all, he's 40 years old and above, and he earns 10K, a HDB loan will get you 3,000. You can use 3,000. A private loan can use 6,000. So he can borrow double for private property.
So you're saying for an employee, it's very straightforward because we just look at your income every month, right? CPF contributions, it's all very obvious.
Yes and no. So employee, right? Privileged people or people working in the government sector has many months of bonuses.
Privileged people?
Or commission-based people as well.
Okay.
So there is basic pay and there's commission bonus pay. Everything that's commission and bonus, you have to take a 30% haircut. So you only count 70% of it.
Okay, got to take 30% haircut because you don't know if the bonus is coming in next year.
Correct. So it's a variable pay. So as you can see, the government has said that variable income is only 70% is taken. So now we move on to the next thing, self-employed. Same thing. If you're self-employed, you're forever variable income. So if I declare my income tax 120K, so that's 10K a month, right? It's only 7K because it's 70%. And if you just became self-employed, okay, let's say I am in Google earning $1 million a year. Then I midlife crisis, I decide to start my own small business called the Financial Orange. All right?
Not a competitor?
Not a competitor. Hey, anybody, it'll be silly if I really do that.
Okay.
Yeah. So, and I pay myself 20K a month, but it's my own money I put in the company. That 20K is not income. The banks will check ACRA, know that the company paying you is your own company, is zero income until you declare income tax next year. So if I'm earning $1 million a year in Google and I want to buy a house, I buy now when I still have the job in Google. Because once I quit the job, the bank thinks I have zero income.
Okay, because in the first year that you are running the Financial Orange or whatever fruit you want to run, it's a zero income because this company which you set up and own yourself and operate yourself is giving yourself the income.
Correct.
And so the bank, to be safe, they treat it as zero income.
Correct. Even if Andrew owns 90% of the company, I only earn 10%. It's still zero. They don't count like, 90% is... No, it's still zero. You own the company, end of story.
Until the next year? When you submit your notice of assessment?
Income tax, yeah.
Okay.
So notice of assessment, correct.
Right. So on that topic, we can talk about notice of assessment and tax filing, CPF contributions. How important are all these factors, and how do they contribute towards this eligibility?
Okay. So again, employed people is very simple. CPF contributions, if you earn up to 6K, you only contribute up to 6K of salary, so it's easy to see that you really earn 6K at least. If you need a loan that has more money and you need to earn more than 6K, then provide your pay slips. If your company is more obscure, so for example, if I'm getting paid by DBS Bank, StarHub, Singtel, it's not obscure. But if you are being paid by Mortgage Master, the first month I incorporate, and you are my first employee, then maybe bank will also ask for salary crediting, just to be sure that, I can pay your CPF for you, I can give you pay slips, you can Photoshop, right? So please don't, but you can. Then you just started work, you got no income tax yet, right? So salary crediting, they will check up to this extent. And that's to be safe. And nothing wrong for the banks to be safe. They're lending you in excess of a few $100,000 to millions of dollars. So that's where all this income is considered. Now, if you're self-employed, make sure the NOA is declared correctly. So...
you should lah.
Yeah. So if you decide not to declare... and IRAS don't find out, okay, not that I'm encouraging it, and you cannot get a home loan and you say, but I'm rich, right? Then I say, but the banks only care about black and white. This is Singapore, right?
Okay.
Yeah, so it's always about black and white. Your income tax, your NOA, CPF contribution, salary crediting, these are what is considered.
But what if you have assets and you know your income is not showing a huge amount, but you have assets to prove that you could actually finance the loan?
So in 2013, when TDSR was implemented, the government actually allowed some leeway, and that is where pledging and unpledging of funds was created, and it's a way to determine whether a person, like you said lah, I have money, but okay, so right now I don't own financial coconut, of course, but I'm really exited millionaire already. So I say, hey Reggie, I'm very, very interested.
Retirement life, you know.
I want to help out in this very good idea and educate people about finance. You know my background anyway. So Reggie said, okay lah, but you cannot work for free. How much you want? I want 2K a month plus steady. Okay, say pay you 2K a month. So now I am a millionaire. I buy a new house. I only earn 2K a month. I need $1 million loan. I obviously cannot get that. But I have cash in my bank, which I don't want to use to pay the house because you know my money earn more money than the housing loan okay. So if I need, let's say 5K income, but Reggie only pay me 2K, so I need to show 3K more income. Every $1,000 equates to, if I show the bank 160K, I have 1,000 more salary. So I need 3K more salary. I just need to show the bank 540,000.
Oh, it can be stocks. It can be
cash is the best.
cash is the
Because
best.
stocks is variable. Your stocks can crash, you know.
Okay,
your
yeah,
cash
of course.
your cash cannot crash.
Definitely not crypto. If you show crypto to the bank,
But it's actually leeway. So last time only the government say you can show your portfolio, but banks, okay, government law and banks guidelines different. Law means can banks say I'm not happy, I don't want, my credit is stringent. The bank win. But banks say I want to lend, government say cannot. Law wins lah. So the guidelines, you have to respect the bank's guidelines as well, right? So the government say can, but banks say only cash. Then after a while, the bank open up, say SGX, your New York stock, your Nasdaq funds. I can see your stocks. Then after that, they can see, some banks now can see gold. So they open up more and more, become more open-minded after time lah. But yes, maybe one day crypto can also. I don't know. But there are haircuts. So example, variable like we say salary variable, right? Some banks, the stocks and shares, they only take 30% haircut. Some banks, maybe crypto, they only take 20% in future. I have no idea. But let's say if you are rich enough to show funds or pledge funds, you can also use that method to get more loan.
okay, did you say for every $1,000 you need to show
160K
160K? That's a
or
huge.
pledge for 4 years, 48,000 thereabouts.
Okay, that's a huge safety margin, I would say, for the banks.
Yeah, but they also make sure you have to show it twice. When you apply for loan once and the day they are going to give you the money dispersed for your loan. Why? Because when you show this extra money, they have to make sure it's over and above what you have to pay for the house.
Okay.
Means if I buy $1 million house, I minimally have 160K to down pay, right? So they want to make sure that after you pay for the house, you still got the additional 160K.
Okay.
So they make you show twice.
Okay. Let's talk a bit about credit score, because we've heard this saying that you need to have some credit card spending to demonstrate that you have good credit, and therefore then you have a good credit score so that you can get your bank loan, right? So what if someone believes that that you shouldn't have credit cards? What if someone doesn't have credit cards and well, he or she doesn't owe anything? Technically should have a good credit score, but there's no credit proof.
Okay, so we talk about loan eligibility, right? Of course, if you're employed by a very renowned firm and your income is high and your loan is small, no problem. So when we talk about, and your credit is clean, like you have 0 credit cards, of course, no problem. But let's say it's a very marginal call. Your income is just nice, your loan is there, or you need a little bit of push, like, can I use your bonus to this extent or not? And we have to justify for you as a banker. Credit score and credit record then comes into play. And I'll rank it in a very funny way. Having credit cards that you pay in full every time is rank number 1. Rank number 2 is having credit cards that you pay on time, not pay in full. Rank number 3, actually 2 and 3 is very subjective depending on which bank lah. If you got no credit cards at all.
So number 2 can be paying on time. But just paying the minimum.
Yes.
Right. You're not paying in full. Okay.
Yes. So why? Willingness to pay and ability to pay is something that you need credit cards to show. Having no credit cards doesn't show that you have ability to pay or willingness to pay. I'll give you a very funny scenario. When I was a banker, very high income, very rich individual and high profile family, $5 million property, $1 million loan. Now, it's very easy to lend. Your property worth 5 mil, you only borrow 1 mil.
Yeah, because they're paying 4 mil in cash.
Yeah, I'm not afraid you zao. Had to say reject. Okay, so family high profile means his father, rich father, high profile lah, but he's normal. So he got a bit angry with me. He's like, why the bank? Do you know who I am? You know who my father is?
Actually, I'm curious to know who I am.
Okay,
do it after the recording.
Then, do you know I'm private banking customer? So of course I'm like, okay, I'll ask my credit, right? Of course, I would never be able to tell the reasons. It's so many years, I don't think the guy even remembers anymore because I solved his problem for him at the end. But the credit department actually told me this. Look, we see this guy Gyro. He has 3 accounts with us in. Don't say the bank.
The bank, yeah, the bank.
In the bank. And 2 accounts are funded, 1 account is not funded. The account that's not funded, all the gyro is from that account. Every single month, gyro not enough. So this
always bounce.
So I
Cannot
instead of writing
pay,
email, the credit officer called me and explained to me, he is, hear this word, Cao Kwan. Got money to pay, don't want to pay. You know, you got some friends, right? Very rich one, but go dinner also always want you to pay for them. Cao Kwan. I don't like this kind of client.
Oh.
I'm like, what? How you want me to explain to the client? Just say my credit don't approve. He wants a reason. I cannot tell him Cao Kwan, right?
Yeah, you're gonna phrase it differently.
Yeah, so
you Cao Kwan cannot give you money.
Cannot lah. So at the end, this guy knows the CEO lah. His father knows the CEO. So problem solved lah. Father called CEO, end of story lah. Yeah.
But for mere mortals like us, so
exactly.
you would recommend getting a credit card, even if you just spend like $50 a month or whatever, just pay for it.
Now I'm a mortgage middleman. I'm the problem solver. So let's say Andrew yourself, right? You're applying for a loan. You actually are buffering, like in between, like maybe can get, maybe cannot get, cause you want to buy a more expensive house, and you zong total, so you got money but no income, not enough income.
My income is not high enough. Okay, for example.
Let's say we use the pledge and unpledged way, and let's say I'll give you an example. Your gyro is from DBS. And your gyro actually missed the past 3 months. You forgot to transfer standing instruction to your DBS account. I'll say DBS may actually reject your unpledged money. Show the money. Because you can throw money to get higher loan, right? DBS will reject you. So when I ask you, I will ask you questions like, hey, your gyro, which bank? Ever got rejected? God, why? I was overseas, in Hong Kong. I forgot to top up the account. Oh, no wonder. Then don't apply DBS, apply UOB. Why? Because DBS can see your gyro Cao Kwan. UOB cannot see. Yeah.
My takeaway is don't Cao Kwan. Because
actually, just don't Cao Kwan lah. Why?
Because credit score is also, you have to demonstrate that you can...
Willingness to pay.
Yeah.
Not just ability to pay. A lot of people have a bit like that. Rich guy got ability to pay, but willingness to pay is Cao Kwan or not.
Right, so your behavior demonstrated that you could possibly not pay on time. And the bank doesn't like that.
Who likes a friend got money, borrow money from you, got money,
and then
pay,
you never see
holiday,
the person? Yeah, correct.
Don't pay you.
Right. Okay. So we talk about the eligibility. We talk about servicing the loan right at the start. So we talk about at the end of the loan. You know, so towards the end, the loan gets smaller, right? If it gets smaller and smaller, is it true at some point that we need to, let's say you want to pay a lump sum? You know, of course, there's the, are there penalties for that? Are there fees if you want to, pay off your loan early?
No. In a loan, there is something called commitment fee and commitment period. So if your loan is locked in and you want to pay down your loan or pay your loan in full, then there's a commitment fee. Lock-in normally happens 2 or 3 years lah. So when you get a new loan, you probably can't prepay in the first 2 years to 3 years. Let's say 3 years lah. Then when you refinance to, let's say your interest rates are like 1.15 3 years fixed, I mentioned, and then on the 4th year, it's already 1.8. So you want to refinance to lower, 1.5, right? When you refinance, you pay down at that time. No fees. But if during the lock-in period you pay down, there is fees. So if your loan gets smaller and smaller, again, refinancing may not be the solution for you because HDB above 250 to 300K, private above 500K, then the bank subsidizes your legal fees for refinancing. So if you don't have these subsidies, it's not worth it to refinance. Then we will advise you to, this is your last refinancing, Andrew. Your loan is already 505,000. The next time, 3 years later, will be less than 500K, no full subsidies. You don't want the lowest rate. You want the most stable rate. So you don't have to refinance anymore. So the next 3 years lock in, after that, you want to pay down. Yeah, after that, you want to pay down, you can pay down.
Okay. So, but does it mean that we also need to pay in one lump sum so that, because no one might want to finance us if the mortgage sum is too small because we're at the end of it?
Yep. But you are staying in your financial institution, right? So you got a stable rate. Please don't take the rate that lowest is 1%, highest is 6%. Then now at 6%, you jialat. You take when you cannot refinance anymore.
You will want
free,
to refinance what, if it's like 6%.
But if you cannot refinance for free anymore, you will take a rate today that you know next time cannot. You will take lowest is 1.5, highest is 2.5.
So put yourself in between that, fixed
Correct.
rates so that you roughly
don't
know.
get the lowest, but you get the most stable. So you will never kena 6.
Okay.
But you will never get 1 also lah. But you can live with it. Right?
Okay.
Yeah.
All right. So something for you to think about.
Yeah.
All right. We covered some basics, but I think I want to go into more advanced strategies because you're a mortgage master, 师傅, mortgage master. Teach us all the advanced stuff. You hear all this about people starting businesses to buy properties. What are some strategies that the rich people do to get properties?
I won't say, okay, rich people have a lot of leverage avenues, which 平民百姓 like us don't have.
Mere mortals, I would
Mere mortals,
say,
yes.
yeah.
我们是
But
we toil
I
in the fields, earn the hard blood, sweat money,
But here I'm also happy, like maybe I can get to employ one of these strategies one day.
Yeah, so actually there are, I'm sure all of us have heard and seen advertisements on FB, on YouTube that,
Sell one, buy two.
sell one, buy two, or how I earn 20,000 passive income by the age of 28.
Okay.
Or stuff like that,
Yeah.
right? Are they lying? No, they are not. Is it true? Of course, not lying means true lah. Is it the correct thing to do? No, it's not exactly correct as well. Everything that can be done with high returns always in life come with high risk. It's standard. High risk, high return. You want to buy Bitcoin? High returns, right? High risk. Well, it was 40,000 USD. Now it's 60,000 USD. It can go back to 40,000 USD, right? You can make double. You also can lose double, lose half. So when these parties online, they hook you in and they explain it to you, one of the bad points is that they don't just explain it to you once. They give you half the formula and then they ask you to pay more subscription, come for another $2,000 course, stuff like that. But that aside, which is disgusting by itself, I'm Bay, come and find me. I
No qualms about saying your honest opinions,
honest
right?
opinion,
Okay.
Is that they do not tell you the cons. If they only tell you the way to leverage to get more, that's the pros. There are good points, and they don't tell you the cons. Any consultant that don't tell you cons are con men. Okay, in my opinion. Okay, if you think you are not a con man, again, I'm Bay. Come and find me, right?
Yeah.
You must,
the guest's
you must be
opinions
fair.
is his own.
You must be fair. You must tell the whole story and then let the person decide. It's like, this is good, this is bad. You still want, take it. It's on you. My job is to give you all the information and advise you the way there, and also my opinions. Okay, so how do you leverage? I'll give you a scenario where it's me, Reggie, and Andrew. If it was just me, and I have 100K extra today, and I want to invest, I will not invest in in a residential property because I have to pay ABSD. Okay, that's number one. Number two, with just 100,000, and let's say I can take a 75% loan for commercial property, I can buy what? 400K property, which means not a very good selection of choices, and you can't really get much lah.
Choices are limited because of your low capital.
Yes.
Okay.
So what I will do is like, hey Andrew, you also want to buy, right? Reggie, you also want to buy. You got 100K, I got 100K, he got 100K. We have $300,000 now. With a 70% loan, we can buy a $1 million property.
Oh, nice.
Right? So the pro is that with our income tax, because we are all self-employed or employed, doesn't matter, allow us to use ourselves as personal guarantor to buy commercial property. We three of us can buy together a $1 million property.
Okay, so we set up a company called the Financial Orange.
Yeah. Okay.
And then we use this company to buy property.
Correct.
Each of us put in 100K. Now we have
Correct.
$300,000 to play with.
Correct. And then the $700,000 loan is about, let's say, $3,000 a month. And I can rent out this $1 million office for $3,500 a month. We make $500. So actually the income, the advertise, the income actually net is 500 But our advertisement, I have 3,500 passive income. But actually it's only net 500. Okay, so that's number one. Hey, but our income actually still can sustain more. So what are we going to do? Buy another property and buy another property and buy another property using our personal names as guarantor. All we need to do is to have enough cash down payment. So let's say how you sell one buy two. I have $1 million house, I have 600K loan. I sell 600K, I got 400K cash. Then now I can buy two 900K properties, 200K down payment. What they fail to tell you is also your liabilities is no longer just 600K. It's now 900K with 200K down payment. It's now 700K loan each is 1.4 million.
Yeah, 2 mortgages running at the same time.
Yes. And the risk is, one scenario, what's the risk? I fail to rent out the property. Ayo, jialat leh. I don't even have 3K to pay the mortgage now. That is a bad scenario. A not so bad scenario is rental prices decrease because there's a lot of supply. If I can think of the idea and you can think of the idea and we share this online and 200 people think of the idea, there's now 200 more supply. You think rental prices don't drop, meh? Everything is about supply and demand, ma? And then the worst thing is property prices drop. Bank margin call. And then for those amounts of money not covered under the secured property, let's say it drops too much, 1 million property, 700K loan, property drop to 800K. Bank say only lend you 600, 100K not covered. They charge you 10% on that.
And do I have to pay that 100,000 on the spot?
You either pay 100K on the spot or I charge you 10% interest on 100K.
Right, because it's unsecured.
Yes.
Okay.
Then what you going to do? In the end, we lose money. So having one is okay. But let's say me, Andrew, and Reggie went to leverage. We have 5 now. Suddenly, jialat. So
And we can have 5 because we're buying through a company and therefore we
Correct.
don't incur ABSD, right?
Correct.
Right, so it's a leveraging play. If you're talking about the pro, so to
Correct.
speak, the pro, you get to leverage.
Correct. And there's even ways. So Credit Bureau Singapore sees bank loans. Credit Bureau Singapore doesn't see loans from ValueMax, doesn't see loans from MoneyMax, doesn't see loans from Oryx Capital, doesn't see loans from Global. So you may not even know what companies I'm telling you. But imagine this. I start one company with Reggie and Andrew. I take one loan from financial institution A, interest rate 6%, but we still make money. Then Credit Bureau cannot check, right? Then we do these 5 more times. Wow, I got so much loans. One renter don't pay, GG, gone. So there are pros, which is the ease of making wealth come fast. And there's the cons where things don't go your way. The road to bankruptcy is very clear also. And it's no joke at the end of the day. Yeah.
Okay, so I like the tagline. I think can be used as tagline. If they don't tell you the cons, then they are a con man. That's what you're trying to say, right?
Yes.
I think it's important to understand the both sides of the picture. I mean, definitely leveraging play. Many people are interested in that,
Yes.
but you need to understand the flip side of it as well.
I think it's brilliant, right? Hey, Andrew, call Reggie.
It's a way to get around.
I mean, we don't need to buy 5, right? Like say, if you can do 3, do 1 Don't stretch yourself too much because if 1 doesn't happen, like rental market is bad, property prices drop, you all still can afford it. But if you can afford 3, do 1, you confirm can pass. You can afford 3, you do 3, you are put at risk. Some people can afford 3, do 5. You get rich fast, you get poor fast. Yeah.
Any other strategies? Strategies that involve maximum leverage or no down payment or skipping taxes? Or is it all just hearsay?
Okay, no such thing as skip taxes, okay?
Or avoid not say
I love you, I pay my taxes on
yeah,
time.
me too.
No down payment, again, a fallacy. When they say no down payment, it means you sell A, you take the A money to down pay B. So technically, A, you never have additional money outflow from your bank account, but still got down pay. Where got such thing as no down payment? You think go Courts buy furniture? Even that one also $1 down payment, right? If I'm not wrong.
Okay.
Yeah, so still got one, what? Yeah, there's no such thing. And there are the advertisements are saying facts positioned in a way to make you think that it's good. I'm not saying it's bad. I'm saying that it's positioned in a way that make you do not look at the cons. So, I watched these shows before on there's a US version, there's a UK version. The only people that you can con are people who want to make something from nothing. And so these advertisements are actually, what are they doing? They're telling you can make something from nothing.
They have a certain target audience in mind. Yeah.
Exactly. So it's actually quite interesting lah. That tagline from that show is that people who are greedy and want to get something from nothing are the people who get conned easily.
Okay.
Yeah.
Okay. But of course, we're not saying that there are scams or anything. I mean, it's just you need to understand what the whole scheme is about.
I think it's brilliant because I actually sat in one of those seminars before. I was invited as a guest so that I can give mortgage advice to the clients. At the end of the whole session, it was my turn to give the mortgage advice. I just apologized, say I'm not free. I suddenly feel ill and I left. Sitting through that thing, everything that he said was correct. But the way he positioned it, if I tell the truth, I am not giving face to his business. I would actually pitch out his lobang. So I just left instead.
Okay.
He is not saying wrong things. He's just saying half-truths. Yeah.
Okay. Before we wrap up this part of the conversation, anything else about mortgage loans that you think you want to highlight or emphasize once again?
Make sure you check on your mortgages, or at least let Mortgage Master send out the reminders for you.
Okay.
Because a lot of people forget. One of the things that made me fall in love with mortgage was a very, very, very unique case. The guy is still my friend right now, become family friend already. When I first started in 2009, walk-in customer, doing well in life. Then I just talked to him. He was like, oh, I have 2 loans from another bank. I'm like, hey, refinance. He said, no lah, interest rates are okay. I'm like, what's your interest rates? Last time 6, now it's 4.5. I'm like, your loan add together 2 million. You know now interest rates are 2. That time in 2009 was 2%. 2% of 2 million is 40,000 a year. So at first my mouth opened. Then he asked me why. Then I told him the reason his mouth opened. I thought 4.5 very good. Last time I paid 6. Yeah lah, but times change, Last time 4.5 is good. Now 2% is good. That was 2009, right? Today 1.15.
Yeah, now 2% is high.
Yeah. So it's all relative. So make sure you monitor, or at least have somebody to monitor for you lah. Yeah.
Okay, all right. Thank you, David. Thank you for watching this video. If you found it useful, like, share, subscribe, and feel free to leave your comments. You can also join our Telegram group, follow us on social media, and sign up for our weekly newsletter. Everything is in the description. For more content, check out thefinancialcoconut.com. I have 3 more questions for you. I'm sure you didn't answer them in Coconut Avenue.
Okay.
Right, the first one is, what is one of your core life principles?
Never tire of doing what is right.
Nice.
Okay, that's the core value of Mortgage Master. Okay,
personal value to company and company back to personal.
Yeah, I mean, just always do the right thing. So, one of the things I say to my business partners, my investors, as well as my colleagues, the people working for Mortgage Master, is, look, we've seen a lot of rich people in the world do the wrong thing and get rich. If they fail, they got no friends. I'm so conservative that I do the right thing. If I don't get rich, I still have friends. If I am poor, my friends support me. I am putting my own safety net by doing the right thing. So my core value is to do the right thing. It makes sense to do the right thing. Then just do the right thing lah. Yeah, that's how I look at it logically as well.
That's one of your core values.
Yeah.
Okay. We're a finance podcast. What is a piece of financial advice that comes to mind that you think should be shared more often?
Do not ever over leverage. Really don't over leverage.
Wow. the whole podcast, we did talk about how to leverage, but okay, good point.
No, leveraging is a facility which lets you get well faster. But that's why I say, I never say don't leverage. Don't over leverage. Because if you leverage to the extent where you paint the worst case scenario in your head and you can afford it, okay, stop there. Don't go over that. Yeah.
Okay. What is an area of your life that you're giving additional focus right now?
My family.
Family, okay. Tell us more.
Of course, my family, there are 2 families. One is my company, and everybody is working for us.
Okay.
For us, I'm also working for the company, okay? So it's part of the family. And now work from home and everything. On Wednesday, we are having our Google meeting with drinks.
So everyone bring their own drinks, but turn on Google Meet.
Yeah. And then my COO, Rainer, has this awesome websites to play games together, like those, Hangman, those guessing games. It's quite fun. We have to make it a point to interact with each other, because if not, you just get sick of, like, am I working for something other than myself? It becomes very boring at home. And then internally in my family...
Yeah, your own family. How do you balance? Because you're running a business, and then you have to, of course, have your own family at the same time.
I think many people have heard me over the years my wife is the rock of everything. Like, she settles a lot of things, and without her, nothing can be done lah. At the same time also, so 3 weeks ago, my youngest son got COVID.
Oh, okay.
None of us in the family has it, and we are still negative, right? But my 2 sons have to stay at home. One is close to 3, one is close to 5. How to work with 2 boys at home running around?
And you have to work from home also, right?
And I cannot now. In that time, had to quarantine. It was the older rules, right? I cannot bring them down to the void deck to walk. When my wife has meetings or I have to talk to a VC. In fact, I was supposed to have this podcast. I was begging Reggie and Andrew, can I do it from home? They said sound issues. Actually, in my heart, I was saying not possible. Halfway through, you'll hear one of the boys yell.
Oh, that's a real sound issue.
Yeah. So it's horrible. It was horrible. So yeah, but it's also funny, during this horrible time where you're forced to spend time with your kids, right? We also got closer. We also had the family moment. I wouldn't trade it as a father. When your kids grow older, one day they will stop hugging you and stuff like that. You imagine that. It's awesome lah. Yeah. So my children, my wife, that's family number 1. Hex 1, importance. Hex 2 is of course mortgage master. Yeah.
I hope your wife is listening as well. There's a compassion down there. Your wife is the rock of the family.
Subscribe, follow.
Subscribe, follow, turn on notifications. Yeah. Okay, thank you so much, David.
Hey, thank you, Andrew.